Hot near 90. Hot, muggy weather continues on Thursday. On the Money Matters Radio Network, I'm Mark Rosenthal.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
Do you have an invention idea but don't know what to do next? Call InventHelp today. We have representatives nationwide who will explain the InventHelp process step by step. Over 10,000 patents have been secured through InventHelp's patent referral services. The InventHelp data bank includes thousands of companies who have agreed to review new ideas. We've been helping inventors since 1984. Let's help you next. Get started today.
Call 1-800-217-4380. That's 1-800-217-4380. Again, 1-800-217-4380.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Tuesday on a jobs week here on the Financial Exchange. It's Mike, Paul, and Tucker with you on a Tuesday. As I mentioned, it's a jobs-heavy week here with the JOLTS report released just 6 minutes ago. We'll dive in once Paul and I actually have a few minutes to read it here. But the big headline here, no massive changes month over month when it comes to this separation and turnover survey that we get on a monthly basis. On Thursday of this week, usually comes out on Friday, but on Thursday of this week, we will be getting the real big jobs report that's released once a month. For the month of June, we're also going to be getting the weekly jobless claims, which usually come out a day separate. This week, because of the July 4th holiday, we'll be getting both on the same day. Tomorrow, you've got the ADP employment report, which nobody cares about. And speaking of employment, our lawmakers are pretty busy in D.C. as they pull an all-nighter trying to get this tax bill done. But before we even get to the tax bill, I think just talking for a minute about markets as we complete the first half of the year here. We just closed in on second half of the year, July 1st, July 4th week, and it's been a pretty remarkable second quarter after a pretty abysmal first quarter here in markets. S&P 500 year to date, only up about 5.5%, but a pretty rip-roaring quarter after sinking towards the end of the first and into the beginning of the second quarter on tariff concerns. Rallied a good 7 or 8% in the second quarter of this year, one of the best quarters we've seen in years here. And so as we head into the second half, I'm just kind of curious in your mind, what are the big potential pitfalls for markets? What are the big opportunities? Where, give me the argument in one case or another as to where stocks go from here is always what people are wondering.
Yeah, so the major areas of concern that are worth monitoring heading into the second half of the year has got to be tariffs and the impact of them and potentially any inflationary pressure that would come from them. That's going to be of tremendous focus. And the labor market, I would say that those are probably the two largest risks that I can think of. Anything from a debt perspective, while perhaps the fiscal discipline of the country is something that is concerning, I don't feel as if it's going to rear its ugly head. Any negative ramifications from the passing of the bill, which will increase the deficit significantly, I don't think that we're going to feel the effects of that in the second half of the year. So that's on the areas of concern side. On the positive side of things, you clearly have had a market that's really resilient. And if I were to argue the other way, that perhaps what we're seeing from a pricing perspective, Mike, on inflation is what is going to be the trend for the second half of this year, where we're going to see minimal impact from inflation and from tariffs in place. And as a result of that, the focus can be more on perhaps concluding some of these trade negotiations that will be put behind us, and the focus can be on the economy and its growth going forward. You still have very low energy prices and perhaps a consumer that will continue to stay resilient if some of those issues can subside. So I think that would be the positive versus the negative case.
Yeah, I mean, Bloomberg laid out a number of things. This year has been a geopolitical hot mess. Russia's war in Ukraine has continued. Obviously, Israel-Iran tension has reared its ugly head. There's been the underlying threat of NATO, and what will the United States do there? I don't think any of that stuff matters for equity markets.
No.
I think it matters. People are dying. It's going to shape the world order 10, 20, 30 years from now, but markets have no idea how to digest that sort of thing. And I, as an investor, have no idea how to place my bet if I believe that the war in Russia and Ukraine is going to escalate. I don't know what that means for stocks. Likewise, NATO or Iran and Israel. Massive ramifications for where the U.S. stands in the future and all of that, but what it means for stocks in the short term, don't know. The markets have reacted to the ones that have a pretty straight line. The only real problem to challenge equity markets this year was the tariff threat, because it had pretty understandable consequences. If you raise tariffs to such a level that trade can't be conducted, then a bunch of companies are going to really struggle to make profits and grow. And so that was the one that markets reacted to. So long as that scenario doesn't rear its ugly head again, then we probably won't have that type of massive distortion in markets that we might otherwise have. The inflation side that you mentioned, I would agree that that is a threat to markets. I would only consider it a threat if we continue to not understand where tariff rates are going to go, though. I'm going to play this out. Even let's say that negotiations don't go incredibly well and we wind up in a tariff scenario of average effective tariffs across the globe of 15%, which would be, like 3 or 4x where we were prior to the Trump administration. You will see an inflation impact, I think. I also think it will be one time. I think it will be transitory, just as Scott Bessent has been describing and imploring the Fed to just lower rates, because the way he sees it is, look, you're going to have these tariffs in place. They're going to be a one-time hit to prices. They're going to get adjusted upward. There is nothing more transitory than tariffs, is what he said. I buy it. The problem is we are not getting the certainty around tariffs. And if the uncertainty continues, then we see more of what we saw in the spring when it comes to things like vehicle purchases. If I don't know what the tariff rate is going to be on one company versus another, one country versus another, then I'm going to lock in my purchases now when I know what they're going to be, and price be damned, I'm going to pull that purchase forward, and that's what can lead to a more significant inflation problem, followed by a potential recession, right? If everybody pulls all their purchases ahead because they're worried about what tariffs might be down the road and not really sure where they go, and then has to pull back on purchases because they're broke thereafter, that becomes a real problem for them.
And you risk creating a supply chain shock as a result of that. Yeah.
The only other threat that I can look out on the horizon to say, hey, this is a problem for equities, is not a short-term problem. The long-term problem that I see for equities is that, once again, we are back at a place here in terms of valuations
that's rich.
That is very rich, and that you haven't really seen since .com age. So how does that play itself out? Short term, not really an issue, because in the short term, investors don't really care about valuations. They seem to matter quite a bit more when you take a look at the 10-year return on stocks and where that goes. But Could you convince me that the innovation going on in the market these days, and combined with tax policy and a more friendly environment for U.S. businesses abroad, could allow these companies to grow into valuations over the next several years, or at least the next 6 months? Absolutely. Absolutely, you could convince me of that argument.
How about the labor market? Do you agree on the assessment that you view it as a concern for the second half of the year?
Yes. Look, we are a consumer-based economy. If people start losing their jobs,
Right.
they're not going to be able to buy things. If people are worried about losing their jobs, they will voluntarily stop buying things. We have never seen a recession that's caused by the consumer. I mean, I'm trying to kind of work that phrase out in my mind. But generally speaking, when we see recessions in this country, it's caused by some external shock to the system that then causes the consumer to lose their job and lose their spending power. Not, everyone's decided to just stop spending money voluntarily, and it led us into a recession. And so those orders of operations sometimes get confused even in my own head. I would not expect a scenario where, job loss causes a stock market sell-off because people stop spending money. It almost always goes in the other direction. A stock market sell-off sparked by some other thing causes companies to tighten the belt, lay off their employees, and then once you're almost all the way through the recession and unemployment reaches a really uncomfortable level, then you start to see the spending die down as people finally tighten the belt, but it has almost never gone the other way.
Sure.
Let's take a quick break. When we come back, I want to jump into the big, beautiful bill making its way through the halls of D.C. That's next here on the Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
See you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
As the Senate works its way through the Big Beautiful Bill Act, is that genuinely the name for it? The Big Beautiful Bill Act. Senator Thune believes the GOP has a deal to pass the Trump tax bill is the headline that's flying across the Bloomberg right now. So we will see where that lands and then heads over to the House presumably. But we could see a vote on this thing any moment. In the meantime, the Yale Budget Lab, which has been studying this bill really since it got started, has a new piece out that's getting a fair bit of headline and fair bit of press, and most certainly will get a fair bit of play by Democrats over the next few days. The richest 20%, which I was trying to figure out how they define rich, if this is a wealth or an income metric here, because I to me, rich means wealth, not income. But we have a very difficult time measuring wealth in this country, so I'm guessing it's actually the highest income 20% would get an average $6,000 income boost from this new tax bill, whereas the bottom 20% would see an average cost increase of $560. Here's how they did this. They compared really what they're comparing here, I believe, is how much that wealthiest 20% would see their income taxes go up were this bill not passed compared to this bill passing, and therefore, yeah, there's a big credit there. There's also things like the tax credits for 65-plus-year-olds that go into place as an attempt to waive taxes on Social Security. Again, that's something that only benefits you if you're actually paying taxes, right? If your only income is Social Security and you're falling into that bottom 20 or 40%, you weren't paying taxes in the first place, and so a tax deduction doesn't really help you on that overall tax scenario, so no big change there. I have no idea if this is actually where it comes down, but it seems likely to me that, yes, a tax bill like this, whether or not it actually increases costs for the bottom 20% is probably up for debate, because we have no idea how states are going to respond to things like Medicaid getting cut and food stamps getting cut.
Right.
So that piece, I think, is a big question mark. Yeah, most of the benefit to a tax cut like this does usually benefit the wealthy. That's the entire idea of trickle-down economics and what Democrats have made their name on fighting against and what Republicans have touted for decades. This is not surprising to me in any way.
No, and ultimately it comes back to a situation where when you're looking at these dollar differentials, part of that it's because of the income gap there, right? It's going to be a more sizable dollar number for those people who make more income. I'd rather sort of assess it on a percent basis rather than using this dollar figure, because I think it construes things a little bit. I mean, but you're right.
It completely construes things. So let me talk about something from the Tax Foundation here. According to the latest tax data, the top 1% of income earners paid a 23.1% average tax rate. They also accounted for, hold on a minute, share of federal tax. Yeah, the top 1% of income share fell from 26.3% in 2021 to 22.4%. Its share of federal income taxes paid was 40%. So the top 1% paid 40% of all federal taxes. So the top 20% had to have paid the vast, vast majority of total taxes. So it's no surprise to me that most of the benefit goes to the top 20%.
Got it. Yeah, exactly. So if you look at some of the specific provisions, you're right. They are more beneficial to people who have higher incomes, though with the over 65, there are some caps in place that make it so, and we're going to get into that enhanced deduction, that they won't, for those people who are really making a lot of money in that over 65 demographic, they won't get the full bump from the way of combating not being able to go tax-free on Social Security.
Right.
But the state and local income tax, the SALT cap being bumped from $10,000 to $40,000, make no mistake about it, that certainly helps people who are higher income earners, not the ultra wealthy, because they do cap that off as well, but certainly a lot of people who live in states where you need to make a good salary of a couple $100,000 to live in New York or New Jersey or California to benefit from that state and local income tax deduction piece there.
I do have, this is really interesting to me actually. So I have this table from the Tax Foundation that breaks down in 2024. This is latest data is 2022, so it's a little bit outdated, but it's still pretty interesting. So the top 1% of income earners, about 1.5 million people filed and count as the top 1%. They paid an average income tax bill of $560,000 and accounted for 40% of all federal taxes owed. Or paid, rather. If you include the top 5%, that group accounts for 61% of total federal taxes paid. If we include the top 10, it's 72. And if we include the top quarter of all taxpayers by income, they account for 87.2% of total taxes paid. So, again, studies like this are interesting, but you have to take it in context of, of course, that's where most of the benefit is going, because that's who's paying all the taxes. Yeah. I'm not saying right or wrong, by the way. Like, there's plenty of justification for I think Susan Collins is pushing for a tax on those for incomes over $20 million. There are plenty of different people that have different ideas of how this should be done, but we shouldn't be surprised by the idea that most of the benefit of a tax cut goes to the top income earners, because most of taxes are paid by top income earners. The top 50% pay 97% of federal taxes. And so even if you don't feel wealthy, half of us are in that top 50% and are paying the vast, vast majority of total taxes when it comes to all of this. So I do believe this ends up getting done. I think there are still some holdouts here and there. I think it's going to pass narrowly. It's unclear to me, for instance, just the dumbest objection that's out here. So there's an issue where they're saying, hey, we're having a tough time getting Lisa Murkowski on board, and so we're thinking about eliminating or shrinking the debt limit increase in order to get Rand Paul on board. That is just Senator Rand Paul, I cannot understand where you're coming from. So what his argument seems to be, I will vote for a tax bill that dramatically increases deficits, but I will not vote to increase the spending, the borrowing limit on the total deficit. That is the most contradictory thing I've ever heard in my mind. I can't fathom how you come to that vote. Either you care about deficits and debt and bills that dramatically expand the total debt, which this one undoubtedly does. Like it or love it, like it or hate it, like that's what this bill does. There's no way of, sugarcoating it. Yes, it makes some spending cuts. I think those spending cuts are justified and necessary. It also cuts taxes way more than those spending cuts would. And what Rand Paul is saying is, I'm fine voting for all those things unless it increases the deficit, which it obviously does.
He wants to put the cart out, but just not even bring out the horses.
Yeah.
I mean, because you're putting out the idea that you want deficits higher in the future, but you're unwilling to
vote for those higher
use the
deficits.
Mechanism to that actually ensures that the higher deficits are made.
What are you voting for here? Just, hey, I want a bill that cuts taxes and raises debts, but I want some sort of magic pill to make sure we don't actually have to pay for that additional debt that we're going to have to raise as part of this bill. It's just crazy logic to me. We've got to take a quick break. When we come back, Wall Street Watch is up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-taxable. countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in mixed territory as traders continue to monitor developments out of Washington regarding President Trump's tax bill, seemingly inching closer to the finish line in the Senate. Wall Street's also digesting fresh economic data points released this morning on the manufacturing front, as well as job openings. Right now, the Dow's up by 0.6% or 270 points. S&P 500 is down by 0.2% or 13 points. NASDAQ is off by 0.2% or 131 points. Russell 2000 is flat, dipping into negative territory. 10-year Treasury yield up 2 basis points at 4.25%, and crude oil up about 0.33% higher, trading at $65.30 a barrel. Well, Tesla stock is in the spotlight again on the heels of an increased spat between CEO Elon Musk and President Trump. After a series of critical posts from Musk about the big, beautiful tax bill, President Trump shot back, saying that the U.S. Department of Government Efficiency, or DOGE, should look at subsidies for Musk's companies for potential cost-cutting measures. Tesla shares are down by 4%. Meanwhile, Robinhood announced it is launching new cryptocurrency services designed to make it a hub for digital assets. After rallying 13% yesterday on the heels of that news, shares are extending their gains by 3% today. Elsewhere, Meta pulling back slightly after CEO Mark Zuckerberg unveiled a new superintelligence division at the Facebook and Instagram parent company. Goldman Sachs upgraded Hasbro to buy from neutral, where the bank said that new sets from Magic the Gathering could help Hasbro's sales. Shares are up by 3% there. And AeroVironment shares down by 7% after the defense contractor announced proposed offerings of $750 million in common stock and $600 million in convertible senior notes due 2030. I'm Tucker Sullivan. That is Wall Street Watch.
So for those who are listening on radio and don't have a video clip right now, Paul is wearing one of the busiest shirts I've ever seen, and it's his Happy Gilmore shirt.
It's very busy.
Earlier wagered my entire life savings on the fact that was a Father's Day gift. Can you pay that off for me, Paul? Was it a Father's Day present?
No, we have an annual.
Tucker.
Wow.
Congratulations.
We have an annual golf tournament every year back where I went to school, and there is always a prize for the best/worst dressed. And so we always try to put together the most outrageous outfits. And so I busted this one out because it is a slow week. Hopefully no one's coming in the office today. And I don't see any important clients.
Yeah.
But check me out on YouTube.
Or
Facebook.
It's pretty top notch.
The Financial Exchange on YouTube.
But I guess the new Happy Gilmore movie is coming out soon. So
I think it's this weekend.
My timing was okay.
I think you can wear this every day for the next 6 months or so. Right through the end of 2025.
If you're going to give me that rubber stamp of approval, then
do it to
good
it,
to
Paul.
go.
At 10 a.m. this morning, we had the job openings and labor turnover survey released by the Bureau of Labor Statistics. This is the report that we got the statistic that everyone recalls back in 2022 when we had a really tight labor market and McDonald's was offering signing bonuses. There were 2 jobs open for every 1 person looking for work. As of this report, we're now down to 1.1. A very balanced labor market is how most would call it. The one piece of this report, so every month they measure, hey, how many job openings are there? How many listings are there for employment? How many people got laid off? How many people quit voluntarily? The big thing to know this month is that there were very few changes to the previous month when it came to layoffs, quits rate, any of that stuff held pretty steady. The one piece that we did see some upward pressure, which is good, actually, was that the available positions increased by 374,000. So this is the total job openings increased to 7.7 million, according to the BLS. Interestingly, and kind of lines up with what we've been hearing, the hospitality sector accounted for 3/4 of that May increase. So you go talk to hotel owners, you go talk to farmers. What you are hearing by and large is, look, I have employees that are legal. They are allowed to work here. They have work visas. They are not showing up to work because they're concerned about deportations. Even if they are allowed to work here, they're concerned about it and they're not showing up to work. So I'm not shocked that we're seeing these job openings and these vacancies in that specific sector. What I am confused about is why 16 to 19-year-olds can't seem to find a job.
That's exactly what came to my mind.
We covered this yesterday, where the unemployment rate for 16 to 19-year-olds for those summer jobs is really high right now. Not quite as high as it was post-COVID when, 2010, when that rate was like 25% and you had PhDs.
Post-financial crisis.
I said post-COVID, didn't I? Yeah, sorry. Post-great financial crisis when you had PhDs, delivering pizzas and nobody could get that summer job. But this would be a moment that I'm just continue to be surprised by, and I'm can't really make a whole lot of sense of why that youth unemployment rate is ticking up when you do have so many of these vacancies in what I would consider to be pretty typical summer jobs. So we'll see. This stuff, you can have data anomalies for a period of time. Jerome Powell is out in Portugal right now for an ECB conference and was asked this morning about the direction of interest rates. And during his panel, he was asked specifically if the Fed would have lowered rates again by now had Trump not announced the levies for many foreign trading partners. And his quoted answer was, quote, "I think that's right. In effect, we went on hold when we saw the size of the tariffs, and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs." So Jay Powell has been under immense pressure, obviously, from the White House. President Trump stepped up some of that pressure campaign just yesterday with a handwritten, I don't know that you call it a handwritten note if they immediately gave it to the press and told them to hold it in front of the camera and say...
It was handwriting.
But it's not a note.
How was the penmanship?
It's not a note,
Excellent. Excellent penmanship.
A note implies, hey, I
So
wrote
good.
something and I sent it to somebody, not I wrote something on a piece of paper and showed it to a camera. But nonetheless, we can disagree on terms. But the argument he put out, which is a reasonable one to have, which is basically that the United States has the highest Fed funds rate, the highest central bank interest rate of most developed countries. There are several that are lower than us that are attracting investment at the moment, and we need to counteract that with the Fed lowering interest rates. And I think that's probably where we end up, because I just talked to Paul during the last segment about how, in my view, even if you had tariffs in place, that's a very transitory inflation problem. Prices get a one-time adjustment based on where those tariffs come in, and then you move along and we're all unhappy but fine. Right? We all hate inflation, but it probably doesn't lead to a self-fulfilling increase in inflation. The problem that I think President Trump is putting Jay Powell in at this stage is a fewfold. So let's take a step back. Like, if you're Jerome Powell, you have several jobs. The most important one is achieving the dual mandate of inflation and stable prices and full employment. That's the number one mandate. You're also in charge of some bank regulation. But, what goes into achieving that mandate, what's pretty central to it, is both U.S. and foreign investors believing that the central bank is independent of the White House and can truly control inflation and inflict opinions on inflation and genuinely control all of that. And so a third objective, if you're Jay Powell at this point in time, is to convince the world that you're independent of the White House. It's not, part of the standard job, but that's kind of part of your role right now is, hey, we need to maintain and make sure that if you are a Japanese buyer of U.S. Treasuries, you're not worried about the idea that I, Jerome Powell, am going to cave to the president and shoot interest rates down and make inflation go through the roof and make you concerned as a Japanese investor that I want to buy those treasuries. Because if they don't, then our whole system kind of comes crashing down here. And for that reason, a handwritten note like this that gets pressed all over the media, as well as these comments calling him stupid and to lower interest rates, you mostly ignore. But it adds another quiver into the idea that, okay, I really have to have a well-thought-out argument and a lot of evidence before I cut interest rates, because otherwise there's going to be a lot of people who are just saying, hey, you caved to the White House. Again, I don't think that's the first thing that they talk about every day, but it is in the back of your mind. It's in the back of your mind saying, okay, if I were going to cut interest rates anyway, can I really lay out the evidence to make a compelling argument? Because if I can't, I'm going to be accused of caving to the White House. It's going to be viewed as an encroachment on my independence, and I don't want that for the stability of the U.S. financial system.
I agree with your overall sentiment, but don't think it's going to be something that is a conflict that's realized, because just what we're looking at here is, Powell is just recently quoted as saying, I would probably have considered cutting rates if the tariffs weren't to arise. So outside of this meeting coming up at the end of July, for future meetings, I don't feel as if they were to cut in September or December or November, there would be any sort of scrutiny that they would feel from the global economic community because of pressure from the president. Though I agree from a longer term perspective, I share the same sentiments that it is really important to have this nonpartisan sort of separation of the Federal Reserve and the White House. And some of these comments challenge that. And in particular, I believe there was a quote saying that the next Fed chair has to be willing to lower interest rates. And that's not really what their mandate is. And that to me is concerning. You're entitled to your opinion as to whether or not where rates should go, but that independence is central to the U.S. economy.
My only point would be that I think there's a compelling argument, had the White House been completely mute on Fed policy this year, that we might not be talking about September, we might be talking about July for the next Fed cut. Might be talking about June, might have talked about earlier than it otherwise would have been in the absence of White House pressure on interest rates.
Well, the other thing is a lot of this stuff isn't fully resolved on the tariff front. If they're playing the card that they're not sure as to what the impact of tariffs is going to be, that's part of the reason why July is off the table, is because this July 9th deadline that's looming, that
we have no idea where tariffs are going to be.
They're going to likely be extended. The negotiation period will likely be extended.
Let's take a quick break. When we come back, I want to talk about the U.S. real estate market. A couple pieces in Bloomberg specifically about Florida and what's going on there. That's next here on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence continues to evolve and can now play a role in financial planning. Hi, this is Mike Armstrong from the Armstrong Advisory Group. There's a lot that's still unknown about the benefits of utilizing artificial intelligence, but understanding it may help you make smarter decisions about how to manage your retirement plan. We have a new guide called AI and Your Financial Plan. In it, we'll take a look at what AI does, how it works, and what risks are associated with using it. The guide is designed to provide you with a clearer picture of the tools available as you evaluate your overall strategy. If you'd like to learn more about how AI can have an effect on your financial planning, call us today at 800-393-4001. That number's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
I've got a pair of pieces from Wall Street Journal as well as Bloomberg on the state of the housing market, which we've talked about over and over at this point. But suffice to say, inventories are ticking up all across the country, but especially in a few specific areas. They're taking longer to sell. And I think those 5 Ds of dodgeball, dodge, dip, duck, dive, and dodge, 5 Ds of housing, divorce, downsizing, diapers, diamonds, and death. Like, the whole idea here has been for a lot of folks that they wanted to hold on to that lower interest rate. And that lower interest rate, nationally, more than 70% of existing homeowners had mortgage rates below 5% in the first quarter of this year. And so the entire idea, I think, has been, if I can just hold on a few more months, if I can just hold on a few more years, then interest rates will come down. I can sell this home that doesn't really fit my lifestyle, and I'll just get a new mortgage at those lower rates. And it hasn't happened. No. We've gotten a few years out. I think there's not a lot of compelling evidence that it's going to happen. And so finally that stuff's starting to hit the market and starting to take a while to sell because, as I just laid out, people don't want 7% mortgage rates right now. And so it's becoming more difficult. I will bring up something that Warren Buffett brought up several times throughout his career, which is the mortgage is one of the best deals out there. You get to borrow money at 30 years at a fixed interest rate, and the rate can only go down.
It's nice. It's amazing that you have the power to dictate when
it can only go down.
Yeah.
Yeah. Goes up, you don't care. You're locked in. Goes down, you refinance. That is a one-way bet that does not really exist anywhere else in the world for real estate and in the universe for investments. And so it's not to say that housing is affordable or any of those things. It's just a really rare deal that you can get as an American buying a home.
In the fixed income market, you'll see it a little bit with the call provisions that some issuers will have. But those, not to get too in the weeds of it, some of them are not just whenever you want. Usually it's one specific date that you have. So it is a tremendous power. What's interesting is just the continued dichotomy of the real estate market here around where our listener base is, a lot of the New England region, versus nationally in these areas that you cover here, where it's almost puzzling. I mean, it's obvious we know what's going on in Florida, but to see some of these numbers in terms of price decreases, sales volume decline, the increased amount of inventory out there, it's just so contrary to what we have.
Summer's here in New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
We've spoken a lot about the state-by-state data. I got a little bit more granular this morning because I kind of just get interested in this data on housing. So what I did is I took a look at 2019 versus 2025 again, May listings and pricing, and I dove in by city instead. And I had to filter a bunch of stuff out because, quite honestly, I don't think anyone cares about the housing supply on Nantucket. It's not really indicative of what's going on in the overall market. So I said, just give me markets where there's at least 500 active listings today. And so Florida obviously, takes a lot of the cake here. If you go take a look, for instance, at Wildwood, the Villages in Florida, the jump in listings is about 50%. So there were 376 listings back in 2019. There's now 764 listings in 2025. Cape Coral, Florida was mentioned. The increase in listings there, they're up a good 30%. 13,700 listings right now in Cape Coral, up from 9,600. Why, in my mind, these things aren't moving, why there aren't giant price reductions. So staying on Cape Coral, Florida, Fort Myers, Florida, it's the combination of that area. The median listing price in 2019 was $295,000. The median listing price now is $430,000. There's just nobody underwater on their mortgages there. There's not a whole lot of situations where people are saying, oh boy, I have to sell because I can't afford this. They've seen massive price run-ups. And so, yeah, if you bought one in 2020, you might be losing your shirt on this. Prices are down in this metro area over the last 2 years. But that's not the majority of the housing stock, right? The majority of the housing stock, people have been there for a while. And so you're starting to see some loosening here. But by and large, this is what's taking place across the country is, yeah, listings are going up. But compared to 5 years ago, prices are still through the roof. Markets are in mixed territory. We'll have a full recap for you in the next hour. Stay tuned, folks. We'll be right back.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now. 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and Your Financial Plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. To those listening here in New England and across the nation on Sirius XM. It's the first day of the second half of the year, closing in on that July 4th holiday. We've got a shortened trading week with that holiday coming up. Markets will close at 1 p.m. on Thursday for Independence Day and be closed all day Friday as well. We're going to be joined in the next segment by Corey Adams from Robert Half, the staffing firm. He always has a great amount of data on the state of the labor market, what employers are looking for, what employees are looking for, and we'll be talking to him during the next segment. We got a job openings and labor turnover survey report, a JOLTS report this morning at 10 a.m. from the Bureau of Labor Statistics. Indicated no real big change in terms of the pace of actual hiring or firings, total separations, and quits all pretty much stayed the same. The one area we saw some mounting pressure here was for job openings. Those saw a bit of an uptick, specifically in hospitality. So there was a jump of over 300,000 job listings out there at the end of May. Most of those, 3/4 of those, coming from the hospitality sector. Obviously, it's May. It's the kickoff of the hiring season for that sector anyway, so not hugely unsurprising, but falls in line with also some reports we've seen on immigration and who typically works those jobs. So something to keep an eye on there in terms of, all the talk this year has been about the loosening of the labor market. If we get to the point where investors are not quite as concerned about tariffs and they're more focused on this tax bill, and we get the looming impact of fewer workers from ICE crackdowns on immigration, do you have actually a tighter labor market than we were anticipating this year? I'm always less interested in what everyone thinks is going to happen and more interested in the kind of outside scenarios. And a tightening labor market in 2025 would definitely be against the grain of what we're expecting for this year. We are going to be getting a report on Thursday morning, a whole bunch of reports on Thursday, actually, on the state of the labor market, one of which is our weekly jobless claims numbers that come in. We'll also be getting some data from the BLS on the overall state of the labor market through the monthly jobs report. Jerome Powell was speaking earlier this morning about interest rates and policy out in Portugal with the ECB, so some stuff to cover there, but relatively quiet week, obviously, on markets as most traders, head out to Long Island or down the Cape for the long weekend, and pretty quiet week in markets so far as we kick off the second half of this year after a honestly kind of surprising, if you ignored what happened in between, where we started on January 1 and where we ended on June 30th was relatively calm, all said and done. You just had a 20% dip in between all of it. Debt is apparently a growing force influencing job seekers' choices, according to an interview done by CNBC. And so, according to this study, 37% of people who respond to the survey that owe less than $10,000, about 20% owe up to $25,000, and this group is being influenced to take on second jobs. About 38% of survey respondents said they took on a second job to pay their debts, according to a report by Zeti. And I think speaks to something that we have been seeing in a lot of the data recently, which is there is a large swath of the American public who, with inflation, is very much struggling to get by over the last few years, Paul.
Yeah, it's been a difficult run. I mean, if you look at prices, Mike, back where they were 5 years ago versus where they stand today, we all know the inflationary impacts there, and not all jobs have kept up with that increase. And as a result of that, you have some people out here looking for different jobs. 71% of those surveyed have credit card debt. Not only is that troubling that they have to take on debt, but also you have credit card rates at a level that are very high from an interest rate perspective, averaging 20+% there. So, there are some suggestions mentioned in this piece, but I don't love them, and it's do a different job. Yeah, I mean, of course that's
find a job that pays 30% more, and you'll be fine with your debts.
I'm not going to sit here on this program and tell anyone something that they would already know if that were the situation. Obviously, scrutiny on your expenses is important. I do think from a long-term perspective, when you go into a certain career, people have to go in eyes wide open as to what the potential upward mobility is in that particular sector of work. That is the thing that I could say, that just go in eyes wide open so you understand what the path looks like. Because I have talked with people previously who find themselves in difficult financial straits, and I pose the question of, well, gee, in your position, do you feel as if you can move upward? And if there isn't that potential to move forward, a younger person I was speaking to was living in Boston, making $35 or $40K a year as a lab research assistant. And I said, gee, what are your plans? Because basically the rental payment was suffocating all of the income that they have. I said, well, is this a job at a lab where you would be, paid more in a couple of years? And it was unclear, the answer, and that to me was quite concerning because you're not going to find a place in Boston to live in sustainably making that.
Yeah, I was going to say, unless we're talking about Boston, Ohio, I don't really know how that's very doable. So, yeah, that's a fair point there, Paul. It goes back to, there's something that really stuck with me that I read sometime over the course of the last few years. The Federal Reserve puts out what's called their Beige Book. It's more formally called the Summary of Commentary on Current Economic Conditions. And basically all of the Federal Reserve presidents go out and they send their people out to talk to the community about stories they're hearing from businesses, from individuals. And I think, I don't remember who put it this way, but one of the Federal Reserve Bank presidents summarized a few of these conversations. When they're trying to weigh out the impact of unemployment versus high inflation, people clearly hate the inflation scenario a lot more. And part of it's because it affects everybody. But bring that to your community, right? In cases where we've had really bad unemployment, Paul, what sort of unemployment rates would you consider to be really bad in this environment?
Double digits.
Double digits would be terrible.
Yeah.
I mean, we saw that during COVID. That's exceedingly rare. Even 7 or 8% unemployment is pretty bad. In those scenarios where you have some modest higher unemployment, it's devastating for those that are affected. But, there are members of your community who are still likely doing okay. And one person put it, in the Great Recession, a bunch of people lost their jobs. But, I was able to call on an uncle who still had his and borrow a few bucks to make ends meet. When you have inflation of this magnitude, everyone in your community is affected in the same way. And you might still have your job, but that job doesn't pay enough to pay the bills, and you're finding yourself in this position where you can't get by, nor can anyone in your immediate community, and you're kind of left with no great alternatives other than running up debt. And so I think it speaks a little bit to the difficult of the inflationary environment we've been in over the last few years. We got to take a quick break. Corey Adams from Robert Half joining us next on the Financial Exchange.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean paradise, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Joining us now is Corey Adams from staffing firm Robert Half. Corey, always appreciate talking to you this time of the month especially. How are you?
I'm good, Mike. How you doing?
Very well, thanks. So before we get into the survey you did, you spoke to 2,200 U.S. hiring managers. I'm sure we've got a pretty good sense of the state of the labor market. How are you describing it right now? I mean, we get the jobs report on Friday. We've been seeing some uptick in those claims for unemployment, but at the same time this morning, we got a pretty good report on new job openings. How do you describe the labor market generally right now?
Yeah, I mean, this is obviously hot off the press, right, with the JOLTS report coming out not too long ago. We saw the job openings were little changed at 7.8 million in the month of May. And, you know, that tells us, like we've been saying, that the job openings continue to be above an historical average, reflecting what we're describing and have been describing as pent-up demand for hiring. And, you know, as you saw, you know, you also see the job openings for April were revised up by 4,000, which seems to keep happening. Obviously, a welcomed revision. That's up to 7.4 million. So, and we also saw that hires were also revised up as well. So those are both really, really positive signs.
So the survey you did, one of your findings here was that it's just taking longer to hire. Can you first tell us about the survey and who you spoke to and what the results seem to indicate?
Sure. So 2,200 U.S. managers were surveyed, and they found, and this is sort of the big takeaway, is that 93% said the hiring process now takes longer than it did 2 years ago. And when they were asked what part of the process is taking more time, they actually said was the evaluation candidate applications, then was checking references or conducting background checks, and then finally was scheduling and conducting actual interviews. So the key stat I would share is that we know that hiring plans have moderated, but 92% indicate that it remains difficult to land skilled talent, and 57% of managers plan to expand their teams in the second half of this year. It's important to note that's down from 63% 6 months ago.
Look, the last thing you want to do is make a mistake hiring, right? Even in the United States, where it's relatively easy to terminate an at-will employee, it's still difficult. There's still risk there. And so I can understand the hesitancy when it comes to the hiring process. But how much of this is an indication of just the state of things right now, where, I mean, for instance, we had a job open here recently and just flooded with applications. I think the process of applying becomes a lot easier these days. Artificial intelligence now is starting to play a role in all of that. How much of this is technological change versus just the state of the labor market?
Well, I think it's probably a few things, and there's a lot here. So we know, as I just referenced from the survey, that companies are seeing a surge in applications, especially for hybrid and remote roles. So it's really slowing down the resume review and screening process. And you're also finding companies have more layers of internal approval, stricter compliance protocols, and just an increased reliance on team interviews. And all this is dragging out the timeline. So ultimately, what you're feeling is that organizations are somewhat hesitant to actually make a hiring decision quickly due to some of the economic uncertainty. And so they'd rather opt to prolong the process to reduce what they consider perceived risk. So what we suggest is a few things in terms of some of these costly hiring mistakes that you just referenced. So first, I would tell you that slow doesn't necessarily mean strategic, right? Companies should really use a structured interview and assessment process, not just longer timelines to improve their outcomes. So involving way too many stakeholders in the process can actually create delays and oftentimes even build confusion. So streamline the process by setting clear timelines, using consistent evaluation criteria, and limiting interviews to only essential decision makers.
How about that overall process? I mean, are we seeing candidates just, move away from jobs that are taking too long? Like, how important is that more of a streamlined hiring process? And are there technologies that can be used to help this along? I mean, when you talk about scheduling, right, I just think to myself, how many interviews or how many meetings have I scheduled just by clicking a link in somebody's email? Why is this process taking so long? What practical things can employers do to improve this process?
So there's probably a feeling from an applicant perspective that they're probably being over-screened in today's market. So as referenced, some employers are just hesitant to commit to a hiring decision and often expand the list of required skills, which can slow down the hiring. It can also frustrate the candidates themselves. So an over-lengthy process or excessive round of interviews sends a message that the company may be indecisive or, worse yet, disorganized. So delays between interview rounds without communication can create a poor candidate experience. It can even harm the employer brand if you think about it. So those candidates with in-demand skills are often interviewing with multiple companies for multiple roles. And you know what? They're not going to wait for the slow movers. So companies should really, at this point, be distinguishing between the must-haves and the nice-to-have qualifications to avoid over-screening. So in terms of additional resources, listen, work with the local talent solutions firm like Robert Half. They can also help provide an outside perspective in terms of vetting support to make better hiring decisions. And in general, staffing firms can actually help hiring managers move quickly through some of the most time-consuming phases of the process, like reviewing applications and pre-screening candidates, because it's basically a full-time job just vetting through the number of applicants, as you referenced earlier.
Any tips for the employees out there looking for the jobs? In particular, I've been hearing a lot from recent college grads and just the difficulty they're finding in finding a job in their related industry. Any tips for those searching employment right now?
Sure. So we've got a longer hiring cycle and more applicants for open jobs. So I can give 4 tips. 2 we've shared in the past, but I think it's pertinent to remind some of these areas that people can focus on. So first, you're going to want to expand your search. Be open-minded about new opportunities in different industries or departments. And in doing so, this will actually help expand your search and introduce you new opportunities that you probably hadn't thought about previously. Secondly, I would say embrace contract work. Professionals can gain experience and build both their resumes and network by doing contract work. This type of work provides a good opportunity to upskill while still looking for a full-time permanent position. Third, I would say invest in your skills. Professional development, such as certifications, can really boost your marketability. Developing expertise in areas like you referenced, such as AI, can actually help increase your earning potential, not just now, but over time. And then finally, and this is just a lost art, is send a thank you note. According to Robert Half research, nearly a third of employers say that when considering candidates with equal skills and experience, a a thank you note following the interview can actually tip the scales in the candidate's favor. So this really small gesture of appreciation actually goes a long way towards making a positive impression.
That's Corey Adams from the staffing firm Robert Half talking to us about their most recent hiring slowdown survey they did. Corey, thanks so much for joining us. Appreciate it. We'll talk to you again soon.
Thanks. Have a great 4th.
All right, time for trivia here on the Financial Exchange. And on this day in 1979, Sony introduced the Walkman, the first popular portable cassette player. The Walkman became widely popular during the 80s for its portable design and private listening experience. Sony sold approximately 220 million cassette-based Walkman units before ending production. Trivia question today. What year did Sony end production of the Walkman? Once again, what year did Sony end production of the Walkman? Be the second person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the second correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Well, if you have been itching to try out some Chinese-made coffee, you can head down to New York City to try out the first U.S. branch of the Luckin Coffee brand, which is the Chinese chain that overtook Starbucks back in the home market earlier this year. They're opening their first U.S. location on Monday. If you're big into financial markets and this name is ringing a bell to you, it might be because
I just was looking at this. I was
Paul's
like,
scratching his head like, why do I know this company? Oh, yeah. In 2020, the company admitted to fabricating over $310 million in sales, inflating its revenue and expenses to mislead investors. This is, again, just what makes investing specifically in Chinese stocks so much different. Had something like this happened to a major U.S. brand, they wouldn't exist anymore, is my general conclusion. Nonetheless, Luckin Coffee making its U.S. debut, so go get your coffee, folks. Quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in mixed territory as traders continue to monitor developments out of Washington regarding the tax bill seemingly inching closer to the finish line in the Senate. Wall Street is also reacting to fresh economic data points released earlier this morning on the manufacturing and job openings front. Right now, the Dow is up by nearly 1%, or 423 points. S&P 500 is dipping by 9 points. And the NASDAQ is off by over 0.8%, or 170 points. Russell 2000 is edging 4 points higher. 10-year Treasury yield up 3 basis points, now at 4.26%. And crude oil up about 0.5% higher, trading at $65.41 a barrel. Tesla stock in the spotlight again on the heels of an increased spat between CEO Elon Musk and President Trump. After a series of critical posts from Musk about the big, beautiful tax bill, President Trump shot back saying that the U.S. Department of Government Efficiency, or DOGE, should look at subsidies for Musk's companies for potential cost-cutting measures. Tesla shares are down 5%. Meanwhile, Robinhood announced it is launching new cryptocurrency services designed to make it a hub for digital assets. After rallying 13% yesterday on that news, in seeing more gains in early trading, that stock is actually now retreating by 2%. Elsewhere, Meta pulling back by 2% now after CEO Mark Zuckerberg unveiled a new superintelligence division at the Facebook and Instagram parent company. Ford announced its sales rose 14.2% during the second quarter over the year earlier period, about 10 times the estimated 1.4% industry increase. Ford shares are up by 3% at the moment. And AeroVironment shares down by 7% after the defense contractor announced proposed offerings of $750 million in common stock and $600 million in convertible senior notes due 2030. I'm Tucker Silva, and that is Wall Street Watch. And the previous segment, we asked the trivia question, what year did Sony end production of the Walkman? That would be 2010. Gordon from Sanford, Maine is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, according to Barron's, the S&P 500, which closed at a record 6201 on Monday, now sitting at 22.8 times future 12-month earnings. Why should I care? Explain to me, what does this mean? Why should I care? That's the highest level that we've seen since 2003, I think, is why I should care. But give me some context.
Yeah, so basically this is a valuation metric. You can use a lot of different ones out there, but what it's trying to capture is the price of the constituents of the S&P 500, which are spread across 11 different sectors out there, relative to what they earn as a collective. And the way that it's used is to get a sense for what is the price and how does that look from a historical perspective. So this one, as you mentioned, is quite significantly high. It's much more expensive than normally those stocks have been priced. These types of valuation metrics, Mike, are helpful when you're looking for long-term perspective on the markets. However, from a short-term indicator, they can be almost useless just because valuations are a product of what people are willing to pay for a certain amount of earnings from a company, and they can be really noisy. And also what you can see, just because something is priced expensive today doesn't mean it will revert back to the mean or its average tomorrow. And it's
also a question of what average will it revert back to.
Right.
If you've got data on this going back, you can, put together data on price to earnings ratios, at least going back reliably to the 1940s. And so you also have to ask yourself, okay, do I expect that valuations in U.S. markets, given the state of the United States today and the position that it occupies, do I expect valuations to return to 1940 level averages or averages over the last 10 years? The last 30 years? What's the relevant time period?
Right, the same thing. I was having this conversation with a coworker the other day. Post 1974, which is when the ERISA Act was signed in, which is basically enabling for retirement plans to be developed throughout this country and
forcing a whole bunch of purchases into stocks that happen every month.
We just covered on the show yesterday. We have automatic enrollment in 401ks. There's a huge swath of the population that is buying into the market every 2 weeks or however often they're paid, regardless of where valuations are. So the market dynamics are a lot different. You also have the democratization of finance, where virtually anyone can open up a brokerage account very readily and easily, compared to just even in the 80s and 90s, where it was much more the traditional old school broker that you would work through. So the dynamics are different. Does that justify a different valuation metric on the market? That's all up for debate.
What we can say fairly definitively is that throughout history, when valuations have gotten into this general territory, it's really tough to say what that means for the next 12 months of returns or the next 6 months or next 30 days. But it pretty definitively has, on average, meant lower average returns over the next decade. And that's about as comfortable as I am putting out there when we sit at levels like this. Because guess what? We were at these levels back in 2023. We were at these levels in 2021. Had you used it as a reason to say I'm going to divest of all of my stocks, it was a pretty bad idea. But I think the compelling piece to me would be, okay, if I'm retiring today and I'm trying to build out a projection of how much is my portfolio going to earn and therefore how much of my portfolio can I spend every year, I would really hesitate to use the last 10 years as my benchmark for what I expect the next 10 years to look like.
Definitely.
That would be the really piece that I think hits home. And I can tell you firsthand that those projections are really all that matters when it comes to someone's financial analysis as to whether or not your retirement plan is going to succeed. And it can differ a lot place to place. And if you're doing them on your own, I can understand why you would just say, oh yeah, give me the last average of the 10 years of the S&P 500. Oh yeah, 12+%. Okay, put that into my... But you have to apply this a bit more critically, especially when we are at levels that we have rarely seen before. And so that would be my compelling piece to you, the listener, is have you thought about what happens to your retirement if equity markets barely squeak out a 6% annualized return over the next decade compared to, 15% over the last? What does that do to your overall financial scenario? If, hey, the stock market did 6 and inflation did 2, and here I am sitting in a very different place than I was for the last 10 years. If you are just unsure about whether or not those projections have been done in your case, are you unsure of what rate of return has been assumed in your own financial planning? Give the folks at Armstrong Advisory Group a call. Let us apply our expertise to your specific scenario to help you provide guidance for your specific future. The number's 800-393-4001. You can give us a ring. Talk to us about our process. We have offices throughout New England, but we meet with clients all over the country, all over the world, via Zoom, via phone, whatever works best for you, and we'd love to chat with you too. That number for the Armstrong Advisory Group, one more time, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, the dollar's had its worst start to a year since 1973. The value of the dollar has depreciated some 10% compared to a basket of other currencies. Many expect it to continue that path. Cause for concern or just a bit of normalization here, do you think? Because I'm landing on the normalization thing. We've had an extremely strong dollar for a few years now. Other countries' economies are recovering to some degree. We are weakening a bit in comparison. And so I don't think there's anything to be alarmed about here, but a weakening dollar and the worst year for a dollar since 73 certainly raises some questions.
Noteworthy, but I would lean sort of what you were mentioning to perhaps just a bit of normalization. What does this mean, for listeners out there? This is helpful for U.S. exporters, for those who are sending their goods to other countries across the world. It hurts people who are importing their products from other countries out there. And then theoretically, you would think that it could weaken international demand if all of a sudden the dollar is weaker relative to their currency.
And I want to play that out as to why that matters again. I mean, the U.S. dollar is the reserve. Right? If you're a foreign central bank, you hold dollars to stabilize your overall financial system. You might hold some gold too. You might own some euros. But if you are a foreign central bank, or if you are a large company operating anywhere in the world, you hold a whole bunch of dollars to stabilize things and make sure that you can get through. If those dollars that you are holding, usually through treasuries or some other instrument, but if those dollars you are holding suddenly depreciate by 10%, it's not a problem if it happens once. But generally speaking, you're holding the dollars because they've been stable forever.
Right.
And if that stability gets questioned, that's the thing that you get worried about. Because if the stability gets called into question, that's where some of those will say, well, maybe I'd better hold some gold instead, or some euros instead, or some Chinese yuan. Probably not. But you get my point that the system that we operate under is important for us Americans to have a strong dollar so that we are still that reserve currency across the globe. And, a 10% move in 6 months is not necessarily what you like to see, but given the appreciation over the last few years, I don't think it's something to light our hair on fire over. Let's take a quick break. When we come back, bit of Stack Roulette is next.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you or a loved one needs a nursing home stay and you aren't prepared, the expense can be devastating to your savings. Understanding the Medicaid process is a key element to any successful estate plan. So call Cushing & Dolan today and request their new guide called Last Minute Medicaid Eligibility. It'll walk you through any changes to the Medicaid rules, how to adjust to those changes, and best practices that can help educate you on how to manage expenses you might incur down the road. Don't leave your assets to chance. Let the experts at Cushing & Dolan help you protect your wealth and keep it away from the nursing home. Call right now, 866-848-5699, and get your free copy of this new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. You can also request the guide online by visiting their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Now is a great time to register for the DAV 5K, taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly. So don't delay. Visit dav5k.boston and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Time for a bit of stack roulette here, Paul. What do you have for us?
I want to talk a little robots with you, Mike. Amazon is on the cusp of using more robots than humans in its warehouses. Amazon employs 1.56 million people. The majority of those employees are in their warehouses. They are on the cusp of having over 1 million robots in some of their warehouses out there. And it's just an area that, for me, has been of interest. Just have a friend who is going to be working at a startup that is looking to develop robots that would be able to do more sophisticated tasks and have the ability to be, I guess, more similar to a human in terms of being able to make calculate decisions and interpret things out there. And so these robots here have developed a long way, where you've seen
like which human is the biggest threat to its existence and to eliminate first.
Terminator. But these ones here are able to increase the productivity of Amazon in their warehouses at just incredible speeds. They've got one down in Shreveport, Louisiana, that has it has certainly humans working there, but the productivity gains have been significant. And of course, whenever you bring up these issues, the concern is that it's going to displace human employees. It seems that's ultimately probably Amazon's goal. And as much as you don't like taking away jobs from people, productivity gains are what you need to have economic growth over the longer term. And ultimately, it's just going to be a retraining and restaffing of employees. But this seems like a sector, it's been for decades that they've been trying to sort of break the wall, that they're able to operate these Amazon robots in warehouses, having them in just, day-to-day life or outside of the confines of a caged area from a warehouse. That seems to be what's aimed for the next 10 years, just like autonomous vehicles was an area that was trying to be developed over the last 10 or 15 years. It can take longer than anticipated.
I'm trying to think of what makes Amazon so perfect for automation to take over. There's a few things. One, a lot of the stuff that can be automated is not in view of the end customer. I think that's actually pretty important, right? Like, there's a lot of concern about this, and if it's all being done in a warehouse that you or I never see, I think people are generally more comfortable with that than the idea of a robot's going to bring you your food to the dinner table.
Yes.
Or you're going to use a self-checkout kiosk at the grocery store. There's, just generally more acceptance of this robotics technology when it's behind closed doors.
Because you can control that environment.
And, I don't really have to think about it.
Well, exactly.
If I'm opposed to it taking humans' jobs, well, I never see it anyway.
Sure.
So it's behind, out of sight, out of mind. Two, it's the same thing over and over. Take product off shelf, put in box, attach shipping label.
Mm-hmm.
So, there are, differences here, obviously, you different size packages, different places they need to go, but it's a very repeatable task. I guess with that in mind, what are the other sectors where this is likely to happen? I mean, outside of, delivery and warehouses. I know fast food has been talked about, but honestly, a few things here and there, I guess you automate. One of them might be the drive-through counter where you don't actually see a person. If you can have some of the cooking tasks done by robotics at a McDonald's, I could see that being useful. But it's not the same thing as Amazon, where you have this big controlled warehouse that's handling such a volume of things. When it's dispersed through a McDonald's, I don't know that there's the same level of automation ability there. I think of, data transcription, stuff that is the same task over and over, of data input into an Excel spreadsheet, things along those lines where you wouldn't be interacting with an end customer. I feel like there's a lot of robotics and automation that can apply there as well. But I'll be interested to see what comes next, I guess would be my point.
Healthcare has been one that has been mentioned where they would be utilized within hospitals. But as you mentioned, the kind of old frontier of robotics is in the warehouses. That's not news. I mean, Amazon has been using these for decades, but it's trying to get them into areas where there's variability in what can happen, where you can have people rushing for an emergency to cause the robot to change directions and things like that. So it's all exciting stuff, probably years away from making mainstream impact. And there obviously is going to be the hurdle of overcoming, people's perceptions to it. Vacuums, they've done a little bit of at least commercialization there. The Roombas have become really popular, but that's far away from the idea of it folding your laundry or something like that.
Yeah. Your July 4th burgers are going to cost more than ever as beef prices are hitting a new record, hence why we at my July 4th party are doing a full pig roast, so dodge that bullet. But your beef patties are going to be hitting a new record, so apologies and a little way to sour on it. I've also seen that we are going to be seeing the heaviest July 4th traffic volume that we have ever seen, or at least travel volume of domestic travel.
I'm almost always on every July because of vacations, and every year we do
the same story.
No.
Beef prices are at all-time high, new record on traffic. It's the same story every year.
AAA always comes out and says there's going to be more drivers this year.
Correct.
That's a lock, and prices are going up too. That's been a lock, but I'm going to argue that the price increase, I think it was only 3 cents differential for the average cookout for 10 people this year versus last year. So, hey, sunny side up there.
Low inflation. Markets are in mixed territory with the Dow up nearly 1%. S&P and NASDAQ in negative territory. We'll be back at it tomorrow with a full recap. Have a great day, folks.